Hello again, everybody. Dr. Richard Smith here with Cycles TV and the Foundation for the Study of Cycles. Today is Tuesday. Must be Tuesday. 22nd? What is it? 22nd, July 22nd. And hope everybody's having a good summer or winter if you're in the Southern Hemisphere, I guess. But good to be with you again and going to look at some really exciting new tools, ways of looking for cycles and identifying good opportunities in cycles today. So excited to share that with you. We'll get into that in just a minute. And of course, we'll check in on the markets in general, what's happening, what we talked about last week, and take it from there. So let me know what's on your mind, and we will get into it. All right. Before we get started in earnest here, I guess I might not have actually shared my screen yet. So let me get this going here. Yeah, okay. Just wanted to start out with some cool little science bits that I came across this week that certainly suggest cycles are at work in our universe. So violent collision of two black holes rippled across the universe. Two black holes, spiral galaxies, rotation going on. Clearly cycles involved here. And the second one was astronomers discover rare distant object in sync with Neptune. Little picture of the cycles going on in our solar system. And this outer band here, some small object that's subject to Neptune's gravitational field and is in sync. It rotates the sun once every 10 orbits of Neptune. So clearly cycles at work in our physical world. And why wouldn't they be at work in our markets and in our human systems here as well? All right, so checking back in on our ongoing hypothesis that markets are in the process of topping for what I would call, not necessarily the top, but certainly sideways, if not correction, over the next few months. Very typical of this time of year seasonally. And we have been looking at the daily cycles in the S&P 500. So let me zoom in on this. Last week, we were about, the 15th, about here. Okay. And the cyclic RSI, let me zoom in a little bit more here. Gave us a tantalizing little cross, but pulled back above. So have not gotten a significant correction yet. But that's not a problem. Haven't really been off to the races by any stretch. And I still believe that we are in at least a short-term topping process in equities. Additionally, we have been looking at the dollar cycles, strong cycles, bottoming. Meanwhile, dollars pulling back a little bit these past couple of days. I would only really get worried if I saw a significant, breach of the lows, as well as a new low in momentum here in the cyclic RSI. But we've got positive momentum divergence here in the dollar. And as we highlighted the last few episodes, we have huge negative momentum divergence in equities. We've also been watching 2-year treasuries as a proxy for Fed funds. And there's a pretty clear cycle in the 2-year treasuries and the futures of 190 trading days. Also, you can't call it momentum divergence, but certainly not, certainly waning momentum as well as waning price, which means likely upward pressure on rates. If this cycle does bring price down, that brings rates up. So doesn't look like the Fed is likely to be coming to the rescue yet. And then finally, we've been looking at the geomagnetic data series. And in particular, there's the 180-day. These are calendar day cycles, along with the 78-day cycle. But there's also this 48-day cycle down here, which is topping at the moment and seems to be producing a little bit of a continued downward movement in the geomagnetic cycles. So that's also suggesting that the geomagnetic cycles may not have bottomed just yet. When we put them all together, we can see maybe a little correction here, but overall still pointing up into October, which we know historically also corresponds with the seasonal lows in stocks. So that thesis is still intact on daily data. These things can take, a few weeks to unfold, and there's nothing to say this has to happen. Okay, this is just what the cycles are suggesting has an increased probability, right? Meanwhile, these markets have been tough to trade. I mean, very spiky, lots of V-shaped moves intraday, difficult markets that really haven't gone anywhere, but have a lot of volatility. So lastly, just looking at the geomagnetic data versus price. Again, here's the past week, right? So the geomagnetic data has kind of, in gold here, has been tailing down. Meanwhile, the cycle is pointing up and price has not gone anywhere. So that's the update on our ongoing monitoring of the cycles and the geomagnetic data and equities. And now I'm going to move on and cover a new feature and also look for some stocks and cycles that you would like to look at. Okay. So this is part of our cycles app. This is only available right now to the Analyst Pro and Master Working Group members. So this is an advanced feature of our cycles analysis platform, but wanted to at least to use it together and get an idea of what some good opportunities in cycles might be. So if you would, please give me a few ideas of equities that you would like to look at the cycles of. So put them in the chat, and we will take a look at some of the equities that you would like to for me to look at yourself. So I know there were a couple of suggestions last week. So I'm just going to go in here now and set up a new watch list. We'll just call it, actually, you have to add a new cluster here. So I think somebody wanted to look at Rigetti last week. The ticker is RGTI. I'm going to get that data from Yahoo Finance. And I added a new cluster here. It's just called new group for the moment. So let me go ahead and add that one. And good, keep your tickers coming in. So I got a new group down here. Call this TMC 0722. All right, so I'm going to go back up here to the top now. See IBM. Going to go into TMC 0722. All right, we got IBM. What else? Meta, ASML. I've already got a Mag 7 list here. So if you are in them, you're in the Mag 7, don't worry about it. We've got that covered already. MU and Intel. I think the rest of them we got covered. Okay, so I think MU is Micron. And Intel. All right, so you can make as many lists as you want here. You can see I've got quite a few going already, including today, the ones that we've added here. Let me check. I know there was another one from last week, another quantum computing company. Let me just make sure I got the ticker on it right. I think it might be Qubit or QBTI. QBTS. I bet is what it was. D-Wave. Okay, so we'll just add that one in too. So one more. Okay. I don't know what BR549 is, Joe, but we're going to start with this. All right, so going back to our watch list scores now. So I know the layout here is a little busy. We're going to be improving that, but the functionality here is pretty incredible. So let's see, we just made this TMC 0722 list right here, right? And we can see which cycles in this list or which stocks in this list are showing a confluence of cycles, potentially with a cyclic RSI trigger as well. So out of our list, the one that's popping out so far is Micron. Okay. And wow. Yep. So what do we see here? We've got three. Actually, I'm going to go back and just go to my profile here. So we've got three cycles, 286, 136. And I mean, just taking those two alone and adding in the cyclic RSI here, right? We've got a very significant momentum divergence, two very strong cycles with strong stability, 73 and 60. Very good, strong strength in those cycles as well, and a significant cyclic RSI sell signal. So right away out of that list, we found a pretty interesting sell setup here. And let me just show you one thing too. So when I first clicked on Micron here, it said 150, 290, and 89 were the cycles, okay? And then, meanwhile, over here, right, when I did the analysis, I got 286 and 136. I got some different cycles. That's because by default, the screener here, okay, is using more data points. So I know this is hard to see, but it's using 1150 bars by default instead of what I usually use, which is about 850 bars. So when I went and changed to use my personal profiles, okay, I got a slightly different analysis because I'm only using 850 bars. Meanwhile, the picture is still the same, right? We got 286 and 136 versus 290 and 150. There's also this 89 and 82, but I think between these two, that's enough. And even if I did pull in all three of these, they're all negative as well. So the picture on Micron is decidedly negative from a cycles perspective. And that was picked up by the scanner to bring our attention to that. So I've made a bunch of personal lists here of my own that I'm interested in following. And these are jumping off points for doing further research and investigation. Just because something is showing a strong signal in here doesn't mean that it's off to the moon or about to crash, or if it's showing no signal, it doesn't mean that there's not a trade there, okay? These are all filters, screens to help us find a starting point from which we can work, okay? So you can set up your own watch lists here, which I have done. And then if you want to look for just the tickers that are showing a score of 5 or higher, negative or positive, right? Then you can filter for the hot only elements of your list. So this is some out of all the things that I've been screening for. These are the ones that are showing the strongest signals right here from the screening that this does, okay? This is not an end-all be-all screen. It's a starting point for further research. So some of the ones that jump out to me in particular, Berkshire Hathaway. Okay, so let's see what's going on with Berkshire Hathaway. So again, we're using more data points in this initial scan, 1150 bars. I'm going to go for a little bit less data. Particular is 150, 149, 150. Really sticking out on the spectrum. Cyclic RSI momentum's down, right? I mean, we haven't gotten a cyclic RSI buy signal here for sure. And we've got a pretty significant new low in momentum. So I wouldn't necessarily be jumping all over this one yet, but definitely keeping an eye on it. And if I wanted to take the analysis a little bit further, you know, maybe I'd look at a few of these other cycles, adding in the 125. Kind of like this 84. So definitely something of interest here. The lower momentum makes me nervous, and I don't have a cyclic RSI buy signal yet. But on the whole, some interesting cycles suggesting a potential bottom in Berkshire Hathaway in the next couple of weeks. Okay. What else do we got? Invesco DB Agriculture Fund. So this is DBA. This one is one that I have followed before. One I'm interested in, agriculturals and commodities in general. I do continue to believe that inflation and unemployment are going to be an issue over the next 6 to 12 months. And commodities, I think, will benefit from that. So I'm definitely interested in this one. Again, I'm going to go to my own personal profile. Okay, 174 and 328. but really 174 almost by itself. Very clear on the spectrum here. We could also look at this 125. Would like to see that stability above 50, but this is still pretty interesting. New low in momentum. Would rather have seen a positive momentum divergence, but momentum curling up. No cyclic RSI buy signal yet. But an interesting one to keep an eye on. Berkshire Hathaway and DBA. And another one here is Proctor Gamble. So again, gonna just go to my own personal profile. So you got 323, 65. What else? Everything else has stability too low for me. But mostly it's this 325 here in Procter & Gamble. That's, over a year, right? So peak to peak is what? Or let's say bottom to bottom, January 30th, 24 out to May 12th, 25. So that's, 16 months. So pretty long cycle here. This would be a longer trade in Procter & Gamble, but that's a beautiful cycle with very strong stability and also supported by a shorter term cycle. But again, no cyclic RSI buy signal here yet. Real estate. This is XLRE. Now this looks interesting. So again, going to go back to my own profile. You can see the 209 here. 318 out here. I'd probably want to add a little more data to these for those longer periods, especially that 318. So, I mean, the 209, that's 4.5 iterations of that cycle. That's okay. But if I were going to do the 309, I'd want to add some more data. So let's add a couple hundred bars, integrate that into our analysis. Okay. So we're really seeing this longer cycle here, this 334 as being the big influence here. I'm going to add a couple hundred more bars. Just want to flesh that one out a little bit. Seems to be stretching more as we add more data to it. So longer term in real estate, this looks interesting. Interesting also with regard to the real estate cycle, which we should be pretty familiar with, the 18.6-year real estate cycle, likely peaking out in 2026 sometime. So that piques my interest from this perspective. Let me push that analysis out into the future a little bit more. I forget exactly how to do that. Yeah, here we go. So let's go out a couple hundred more data points into the future. So this would put the top of this XLRE cycle out in early 2026, which that's pretty interesting. And we've got momentum. We got a cyclic RSI buy signal here. And momentum is pointing up and is above the bottom line. So all of that does look like an interesting opportunity to me that I'll definitely be keeping an eye on. There's some shorts in here as well. Somebody wanted to look at Bitcoin. So Bitcoin is currently showing a lot of topping cycles, much like equities. By the way, Bitcoin is increasingly correlated with equities. We can look at that and talk about that in just a minute. But I'm just going to go back to my shorter term. That's particularly this 84 and maybe this 288. But the shorter term cycle in Bitcoin, right? The 84-day, which is plenty long for most of us, showing big negative momentum divergence and coming into that cycle top here. So likely at least a breather for Bitcoin. This 288 does have very strong stability. We look at it just alone. It's about 3 iterations of that cycle. Can add a little more data there just to flesh it out a bit more. Yeah. So serious momentum divergence. Got started on this cycle early. Not crystal clear with regard to Bitcoin. All right, so let's go back here, see if anything else is jumping out at us. Oracle, the VIX, that's interesting. So VIX cycles here. This 126-day trading day cycle in the VIX is very interesting, and certainly has bottomed. Okay, with the cyclic RSI kind of skimming across the bottom right now, not really turning up in earnest, but a pretty strong cycle there with a potential for VIX going up, which of course would mean equities coming down. And that's interesting too. So again, let me turn this off, right? I've got a bunch of different lists that I've made here. I'm looking for interesting setups. Got commodities, financials, energy, communication. The Mag 7 over here, Tesla looks maybe a little, it's got a -2. So minus means that it's more likely to go up, and plus means it's more likely to go down. So not a lot of strong signals in the Mag 7 stocks. Overall in the ETFs, the spider ETFs, I thought this was interesting. Consumer staples and real estate, we looked at that already. Let's take a look at consumer staples. Again, got some longer cycles here, this 338. And these are good setups for longer term trades that you'd be in for a year or two. It's 84. So interesting, got good momentum divergence here too. On the positive side, right? Moving up. So far we've got I'd say an interesting long setup in consumer discretionary. We see some risk from the VIX. We see some strong momentum, negative momentum divergence in Bitcoin, but maybe a little more tailwinds from the cycles. I think an interesting setup in XLRE to the long side with momentum moving up and the cyclic RSI buy. Proctor Gamble. Again, it's that kind of longer term 323-day cycle. DBA. That's interesting to me. Berkshire Hathaway. Would like to see that moving up a little bit more. And Micron. Whew, that looks pretty scary. So this functionality is available in our advanced subscription to our platform. So those of you who are Analyst Pro or Master Working Group members are able to use this already. And now, let's see. Let me just take a few questions. So I'll bring it back over here. Any free features on the app? So our basic subscription membership to the foundation, it does include some watch list functionality. It doesn't include the kind of continuous updating scanning that I'm showing you right now. But there's definitely a lot available. You can do daily analysis on anything, weekly analysis, anything that's in Yahoo Finance with a basic membership to the FSC. Berkshire completed fifth wave up, going down. Okay. Thanks, Mark. Always appreciate it. Are we talking longer term trades? So look, everybody's definition of longer term is different, but what you are trading really matters. Okay. So if you're looking for trades that last a year, 3 years, 5 years, then you should be looking for cycles that are closer to that duration. If you're, trading intraday, that's a totally different story. So there's as many different trading timeframes as there are traders, and that's really up to you if you're looking at longer term trades. Right now, we are looking at daily data, which minimum trade length on daily data is at least a few weeks, and better, more likely, few months, and even out to a year or more. Okay. Rowan, the real estate looked bullish, but it is counterintuitive if long-term rates remain high and equity valuations look stretched. Totally agree, Rowan. We're just looking at cycles. Okay. So cycles are setups. These are not trades necessarily. They help you decide what trades you want to make in your own portfolios and for your own needs and with your own inputs. Crude oil, please. Okay, we can take a look at that. And silver. Yep, silver, I think, is looking heavy. How wise is it to go long term? There's a good chance of the market topping and undergoing a deep correction. So, again, trading is difficult. Investing is difficult. Risk management is a big part of the answer to your question. I know it's really tempting and to be looking for market tops, but really the constant quest for market tops is more of a, I think more more money has been lost by trying to time the market perfectly and staying out and missing the long-term bullish trend in the markets. That I think that's unfortunately been a very destructive element of cycles analysis, is constantly trying to look for the top. So right now, what I can tell you is that, the risk in equities is sideways to down, and it's not a back up the truck moment in equities. That's all I can really say right now. But I think that even within that, looking for some of these opportunities within the equity space is an interesting way to be able to, be in the market and participate without trying to like constantly say, well, I'm going to get in when we get a bottom. It doesn't work very well. What do cycles suggest about duration of a potential correction? Good question. DBA's sister ETF, PDBA, avoids the K1 tax form. Thanks, Charlie. Worth checking out. How much does the 41-month cycle play into your thinking when looking at shorter cycles? So right now, the 41-month cycle, it's when I see the 41-month cycle has topped, and I'm looking at the daily cycles, which look toppish at the moment. Those two come into my thinking to say, look, I'm not bailing on the market, but I am also looking for shorter term trading opportunities to the downside. And I'm not backing up the truck on equities here, no doubt about it. Larry Williams said bottoms are much easier to pick than tops. Absolutely. Great friend of the foundation. All right, so we had a couple of other requests we want to look at. Let's get back to a little analysis here, and then going to wrap up with just a quick mention of my other product, Risksmith. All right, so we did have silver showing up here in commodities. Silver's absolutely looking toppy at the moment, but meanwhile, it's making new highs as well, right? So yeah, here's silver. We're looking at 1150 bars here, so that's a longer term analysis. This is the futures daily data. Okay. I'd want to see, well, I don't know, that's a pretty powerful 305. You've got, bottom, top, bottom, top, bottom, top. So maybe a little more room to run there. Got a breakout buy on momentum here. And it's still going up. Yes, it's a negative momentum divergence, but I wouldn't really want to jump in front of that train right now myself. Okay, if we go look at some of these shorter term cycles like 96, showing a top, but again, momentum is going straight up and it's outside the upper band. So again, I wouldn't want to get in front of this freight train. I would not necessarily be a long-term buyer of silver here, but on the short term, momentum is definitely on the upside, and looks like a little more life from this longer term cycle, with the shorter term cycles starting to top. And there was one other request for oil. Let's take a look at crude oil. All right, so this is 1150 bars. I'm going to go back to 850 bars. This 174 cycle on crude oil. So 63, 118, and 174 all look like you kind of need to pay attention to them all. The overall drift from the cycles looks a little negative, but And you've got a cyclic RSI sell here. But that was big momentum going into that move there, including like a relative high in momentum. Looks like sideways to down to me. All right. So just to wrap up here, I want to take us back to Risksmith because I think it can help you. And right now it's still free. So risksmith.com, you can sign up for a free account. We're going to build a new portfolio. Actually, sorry. Cancel that for the moment. We're going to build a new collection. And in here, I'm going to put in a few of the ideas that we've come across so far. That was XLRE and XLP, PG, Berkshire, B, and DBA for the long side. I think that's a good start. Okay, so I've added 5 tickers to this collection that I want to keep an eye on. And I think out of all of these, the one that interests me the most right now is probably DBA and XLP. So now I'm going to set up a new portfolio. $10,000 of initial capital, 1-year holding period, and I want my average risk per trade to be about $500. Okay, now I'm going to add a couple of tickers, XLP and DBA to start. All right, so I've got 2 tickers in this portfolio right now. And right here in the exposure column, they both have $500 of exposure. This is a 1-year portfolio. So that means, you know, that they could, over a 1-year period, an extreme move for this size of position in this asset. Okay, so that's about $7,000 in DBA and $9,000 in XLP. The likely volatility on that over a 1-year period is about $500, either up or down, right? So I can look for now other ideas from my cycles trades collection that I might want to pair with these other trades. And I'm looking particularly at the correlations. So Berkshire's uncorrelated, or it's not, it's the least correlated of the options here. So I could add some Berkshire to this portfolio. And again, this is just showing you kind of how this works, what you can do with this. I'm not advocating for this portfolio yet. What I'm showing you is how we scanned for cycles, and then we can go about actually building a portfolio with trades that have risk parity and are minimally correlated as much as possible. Okay, so let's just say I'm going to approve these changes, and then I need to rebalance this because I've gone over my $10,000 limit. Right, the portfolio is about $24,000 now. So I can rebalance this, and I can say, just divide these 3 trades up between $10,000 and apply. Okay. So now my portfolio is about $10,000. I have 3 stocks in the portfolio, all with about $200 of exposure each, and all with pretty good cycle setups. So I'm going to approve those changes. And leave it at that. So what we've covered so far this week, we've shown how we can begin to screen for opportunities with good cycle setups and easily filter for the best ones. And then also how we can start to make collections of our best ideas. Okay, we can build this out over time. And then we can start to build and work towards portfolios of our best ideas that ultimately give us diversification and control over our risk. Okay, so not enough diversification in this portfolio by far. Needs a lot more work. We will continue working on this next week and developing it. But I wanted to give you an introduction to these tools, show you how this works, and give you an idea of where we're heading over the next couple of weeks. So with that, I have used up my time for today, and I do have a hard stop. I'm sorry. I have another appointment that I have to get to. So wrapping up, I'm still, again, I'm nervous about equities here, okay? I don't think we're in a back up the truck moment. I think there's a risk of a significant correction. By significant, I don't mean end of the world. I'm still looking for highs in 2026 myself. But I do think there's a risk of a significant correction in the next few months into the October lows. We can scan for cycles on almost anything now, look for opportunities in individual equities, and build portfolios with a longer term focus with good risk management. So that's what I've been working on for years now, honestly, decades. And I am excited to be able to share these tools with you all and to continue to work on them and explore them together in the weeks and months to come. So thank you again for joining us on Cycles TV today. And I look forward to seeing you again next week. And in the meantime, be careful. Markets are kind of crazy right now, especially if you're doing anything intraday. It can be brutal. Just this morning, right? I mean, markets jerking traders around in pretty unprecedented ways, I would say. So it is a risky time in the markets right now. You have to be vigilant, and you got to know your time frame. Okay, if you're trading, if you're doing your IRA for 5 or 10 years, this should mean nothing to you, right? And on the other hand, if you're trading futures intraday, whoa, you better be glued to your screens. All right, everybody, thanks. Have a great week. I'll see you next week.